If you're a medical professional looking for the ins and outs on credit scores and how to improve yours, stay tuned because that's what our topic is today. Ever wondered what goes into that mysterious number called your credit score? If you found yourself scratching your head over your credit report, you're not alone. Understanding your credit score is crucial, whether you're buying a home, securing a loan, or just keeping your finances in tip-top shape. So in this episode, we're going to break down the elements of your credit score, show you how to improve it, and give you the tools to take control of your financial health. So let's dive into your credit score demystified, simple tips for better credit. A credit score is a 3-digit number representing your creditworthiness, or what the banks think your creditworthiness is. So it's crucial for loan approvals, for mortgage rates, and securing favorable terms. And what I would say is today, it is so much more important than it was even 20 years ago, 30 years ago. I mean, over the years, I've bought houses, but so much is riding on the credit score now, and it just feels like it's very sensitive. So today, as a medical professional, understanding your credit score helps manage your finances and your financial opportunities more effectively. So this video is going to guide you through what impacts your credit score and how you can improve it. So what makes up your credit score? As I mentioned, your credit score is a 3-digit number that represents your creditworthiness. It is calculated based on several factors, each of these carrying a different weight. So if you look at this slide, you're going to see that. So here's the breakdown. On the payment history, your payment history is the most significant factor in your credit score. It's reflecting whether you're paying your bills on time. So late payments, missed payments, defaults, all of those things can seriously impact your score. So I used to do a lot of crazy international travel for my job. And, my hours were weird. You're working long days, you're working weekends. And what I did many years ago was I set up all of my credit card payments and my mortgage on automatic payments. And so what that does is it's ensuring every single month that all of my payments are on time. Actually, I've got them scheduled to pay, I think, a couple days earlier than what the due date is. And so some people will argue and say, well, I'm going to pay off my credit every month. And I think that's really great. But I also understand the reality is that most people don't do it, or they'll hit a glitch and they can't do it. So what I would say is one way to keep this payment history part, which is literally a third of your credit score, on track is to set up automatic payments. So remember that you can always make extra payments. It's not one of those things where you can only make one payment a month. So you can do the automatic payments. And then if you want to pay it off, go ahead and pay more. That's perfectly fine. So you can do that. Amounts owed. Amounts owed also accounts for a huge portion. This is 30%. And this refers to the total amount of debt you owe compared to your available credit. It's also known as your credit utilization ratio. Credit utilization ratio just means how much of your credit, of your allowed credit, are you using. And the lower your utilization, the better it is for your score. So I want to stop here for a minute because this is something that is really important, and people don't understand all the concepts around this. So when we talk about credit utilization, I want you to think of that as a bucket. So your bucket is all of the credit that you're allowed. You've got a card with a $10,000 limit, you've got a card with a $20,000 limit, and you get some sort of loan for $15,000. Okay, so if we add those up, 10 plus 15 plus 20, we end up with 45,000. And maybe you were using half of that credit. So half that credit is, call it 22,500. All right, so that's your utilization. Your utilization is at 50%. Then something happens, you get a bonus or something, and you say, I want to pay off everything on that $20,000 card. So you pay it off. But then you decide, I want to close that card because I don't want to use that anymore. I don't want to be tempted. So the problem with that, the good thing is that you paid off the card. So that improved your utilization. But the bad thing is if you close the card, you've now lost $20,000 of your available credit. And so what it means is now what you've got is the 10 and the 15, so 25,000, and you're actually probably using more than 50%. So you can see that what you want is to keep that utilization ratio low. They like it to be under 30%, but also think hard before you're closing stuff out. So there's nothing wrong with having credit cards or having credit availability where you're not using those cards all the time. I would say use it periodically so they don't automatically close it. But what you want is to keep that credit bucket open and your utilization low so that it makes your credit score look good. Okay. Keep the credit line, whether it's this way or another way. So I have a client that's a medical professional, and we were talking one day, and he told me that he never used credit and he never used mortgages. And I said, why? And because obviously I like the idea that a mortgage is you can buy, more house than what you've got money in the bank for. And he wasn't originally from this country. And so he never understood quite the rules with it and never got started. Now, the issue now is he's probably, 55 years old. He's never established any kind of credit history. So if he gets a credit card, he's going to pay crazy rates because there's no history and he can't get a mortgage. So think about that. Depending on where you are in your journey, we want to have a decent credit rating. This system, I don't think, is going to go away anytime soon. So whether you're young, you want to get started with something. Whether you're older, you just want to keep it cleaned up because you never know when you're going to need that good credit score. Okay, so next we've got this length of credit history, kind of like what we're talking about. That's 15% of your score. Doesn't sound like much, but if you're just starting off, like this medical professional client of mine, then it's going to be a long slog to try and build up that history. Next, we've got credit card mix, and this is the variety of credit types. So this could be credit cards, this could be installment loans, it can be other loans, and having a variety gives you a positive impact on your score. So I want you to note here on the bottom, it's saying that new credit is 10%. So if you keep trying to open cards, that's going to ding your credit. Okay, so we want to be careful. And if you're tracking this, you just want to be careful not to be trying to open up too many things at a time. So what boosts your credit score? Talked about on-time payments. Paying your bills on time is the single most effective way to boost your credit score. Remember, we talked about those automated payments. Okay, keeping our balances low, trying to keep our credit card balances below 30% of the utilization on our credit limit. And if possible, aim for even lower results than that. So we also want to regularly review our credit report. Okay, checking your credit report for errors and disputing inaccuracies can prevent your score from being unfairly penalized. For myself, I usually do this kind of in January. End of the year, you get through everything, holidays and all that stuff. And I'm usually checking these reports in January. I am monitoring my credit cards on a monthly, even quarterly basis for certain things, just making sure that there's no anomalies in there and things that got charged that shouldn't have gotten charged. Okay, so adding positive credit history, if you don't have much of a credit history, you want to consider using a secured credit card or becoming an authorized user on someone else's that's got some history. As soon as your name is on a card, you're starting to build some history. Okay, so negative impacts, obviously, late or missed payments can drastically lower your score, and they can do that fast. High credit card balances or maxed out cards also undermine your score. And then too many hard inquiries. What we talked about was applying. So if we're applying for a credit in a short amount of time, hard inquiries. And what you'll notice now when people are talking about, we can do a soft inquiry, what that means is it's not a hard hit on your credit score that you're asking. There's ways of doing that now. Didn't used to always be that way. Okay, so how can we check our credit score for free? And I would say when we're looking for a credit score for free, be sure to read the fine print. There are several companies out there that do that. We're going to talk about this a little bit, but sometimes, and it's not unusual, that you can get a free report, but that they want you to sign up for something. And that if you don't cancel it within, call it 7 days or 30 days, they're going to start charging you for something. But in general, these reports are free. So easy enough to cancel, but you want to read the fine print. So you can check your credit score for free through several reputable services. Here are some of the options. We've got annualcreditreport.com for a free annual report for each of the 3 major bureaus. This is the one that I usually use, and January is kind of when I'm checking those things. It's like after you've gotten through the holidays and you've done your spending, and I'm starting to look at taxes, I'll go through and get a copy. And in that copy, you can see basically everything. You can see what the scores are. You can see the history on all 3 bureaus, but you can also see if there's any problems and anomalies. Now, the other thing that has come about in the last couple of years is that some of our banks, I think my bank, even my small local bank here, is offering you to be able to get a copy of your credit report. And I think I can look at that on a fairly frequent basis. I don't think it gives me all the detail, but from month to month, it's telling me if it's going up or if it's going down. Okay, so then we've got Credit Karma. This service offers free credit scores and reports from TransUnion and Equifax. And then we're talking about Credit Sesame is another free service that provides your TransUnion credit score. So what I would say is that you want to be able to look at all three bureaus, not just one, not two, all three. And you're probably thinking, well, why are they different? You know what? It can be different. It can be reported differently. So many years ago, I was living overseas. I'd gotten a job and I was working in Paris. And there was a problem that it was interesting because I was moving from Houston, Texas. And on my MasterCard, when we updated the address, they updated it as Paris, Texas, not Paris, France. Problematic. I wasn't getting the bills, wasn't really paying attention, but it did ding my credit report way back when. So, we wanted to stay on top of that, and it looks different. The numbers can look different among the three bureaus. How do we remove incorrect or negative items from our credit reports? So if you find an incorrect or negative item on your credit report, you don't panic. Here's what you can do. You can dispute the error, contact the credit bureau that reported the mistakes. You can usually file a dispute online, by mail, or over the phone. Remember when I was telling you about that problem with my MasterCard and moving out of the country? That was one of the things that I did, and it was only that card. And so when I went about it and showed them that the address was wrong, all of this, they were able to correct it, but it was a little bit of a process. And one thing that I would point out here is that when you find errors, which is why we want to stay on top of it at least once a year, this is not fast, right? This can take easily 3 or 4 months. I remember when I was first moving to Buffalo and I was buying a house here and I ran my credit report and there were some problems on there. And Wells Fargo was based out of Minneapolis. And so I thought I was going to go with them. And so when I reported those, I said, because I was moving and I was interested in buying a house. And I said, well, can we get those changed? And they said, oh, that's going to take minimum of 3 months to get those off your credit report. And I'm thinking, what? How can that take 3 months? We know what the problem is, had the documentation. And so it literally ended up changing the bank that I worked with when I moved to Buffalo to buy my house, because I couldn't get past that at Wells Fargo. And I found somebody in Buffalo at, I think it was HSBC, that could help me, and that didn't make a difference. So in the past, and for some people that are, in my age group, we may have had the ability that if you had a letter that was written and signed by whoever it was, that they could fix it right away. Unfortunately, today, that's not the way it works. They're still going to want the letter, but it just has to go through some different gyrations before it's going to take it off your report. Okay, so we're going to dispute the error. We're going to provide documentation, and we want any documents that support our claim. This could include receipts, statements, or letters from the creditors. Okay, and then the follow-up. So you need to follow up. Just because you reported it doesn't mean it's been fixed. So you want to follow up with the credit bureau, has 30 days to investigate your dispute, follow up to ensure the error is corrected. So one other thing that I would say here is if you are in a situation where you're trying to get that score improved, you've got some old stuff that you can't get off, and there's some games out there that are being played. I mean, this has been going on. This is not new for years about your credit. And let's say it's an error, and then they keep reopening the account and opening the account. There are people out there, organizations that you can pay based on the item to get those removed, that they may be working through a legal office, and they can get that taken care of for you. So I went through that with 2 or 3 items, 15 years ago. And it was an organization in Missouri. The woman that I talked to, man, I don't know what she did. They were Rottweiler, whatever it was, but they managed to get the stuff off fairly quickly. But understand that credit score is a living thing. It's living and breathing. It can go up, it can go down, and it's just staying on top of it and making sure that you've got a decent score. So we've talked a lot today about how to get and keep your credit working for you. This is all part of getting your money working for you and accumulating efficiently for our hard-earned retirement. So while it may be hard to think about it if you're dealing with some debt, I want you to look at retirement as a destination. A lot of people feel like retirement is so far out and are not sure exactly what to do now. But what happens is if you don't start planning for it now, you're going to be working a lot longer than you wanted to, or you're going to have to reduce your lifestyle versus having what you actually want at that time in your life. So you could push this all off, or we can actually hop on a call and have a conversation about creating a safe, optimized strategy so that you can retire when you want on the terms that you want. So do you want the 6-hour train trip with 10 stops, or do you want the express train that gets you there in an hour? I like the express train, and that's what I give my clients. So you wouldn't plan a trip around the world the week before you left. So don't do that with your retirement. It's actually the longest vacation that you will ever have. So click the link and let's talk about it. We'll see you next week.